Why did my credit card limit get cut unexpectedly? Have you ever checked your credit card account and suddenly seen your credit limit lowered without warning? That can be confusing and even frustrating, especially if you're relying on that limit for rewards or travel perks. Let's explore why this might happen and what you can do about it. A credit limit is the maximum amount you can spend on your credit card. It is set by your card issuer based on your credit profile, income, and payment history. When your limit gets cut unexpectedly, it can be due to several reasons. One common cause is missed or late payments. If you pay your bills late even once, the issuer might see you as a higher risk and reduce your limit to protect themselves. This can happen even if your overall payment history is good. Another reason is low or no card usage. If you haven't used your card for a long time, the issuer might decide to lower your limit. They want to encourage activity because they make money from transaction fees and interest. If your account sits dormant, they may reallocate that credit to more active accounts. Changes in your credit profile can also trigger a limit reduction. For example, if your credit score drops because of new debt or missed payments, or if your income decreases, the issuer may review and lower your limit. Opening or closing other credit accounts can also impact your overall available credit, prompting a review. During uncertain economic times, banks often tighten lending standards for everyone. They might lower limits across the board to reduce risk, even if you have no issues with your payments or credit profile. Suspicious activity or signs of identity theft can also cause sudden limit cuts. If the issuer notices many new accounts opened in your name or unusual spending patterns, they may lower your limit as a fraud prevention measure. A lower credit limit can affect your rewards and travel perks. It increases your credit utilization ratio, which is the percentage of your available credit you're using. If your limit drops but your balance stays the same, your utilization goes up. This can hurt your credit score and make it harder to qualify for premium cards with better rewards. It can also limit your spending power. If you need to meet a certain spending threshold for a sign-up bonus or category bonus, a lower limit might make that more difficult. Plus, if your limit is cut significantly, the issuer might close your account altogether. Losing that account can shorten your credit history and reduce your total available credit, both of which can lower your credit score. If your limit gets cut unexpectedly, your first step should be to contact your issuer and ask why. Sometimes, explaining your situation or showing improved financial behavior can help get your limit restored. To keep earning rewards and perks, use your card regularly with small purchases and pay them off on time. Always pay at least the minimum due, ideally the full balance, to avoid interest and keep your payment history strong. Monitoring your credit report for errors and keeping an eye on your credit score is also important. Avoid closing old accounts because they help maintain your credit history and overall available credit. Remember, a credit utilization ratio below 30% is generally best for your credit score. Even if your limit is lowered, you can still earn rewards. Focus on cards that match your spending habits, use category bonuses, and consider asking for a limit increase after demonstrating responsible use. If travel perks are your goal, pay attention to how limit changes might affect your ability to meet spending requirements for bonuses or elite status. In summary, unexpected credit limit cuts often happen because of changes in your payment behavior, economic factors, or issuer policies. Staying informed and proactive can help you maintain your credit standing and continue making the most of your rewards and travel benefits.